Welcome. You're watching the NWR Resources Mining Series. We're joined by EcoGraph. EcoGraf's vertically integrated battery anode material business is supporting the global transition to clean energy for the rapidly expanding electric vehicle and lithium-ion battery manufacturers. Presenting today, we have Andrew Spinks, who is the Managing Director of EcoGraph. If you have any questions throughout the presentation, please feel free to use the Zoom chat function. Over to you, Andrew.
Thanks, Lauren. It's nice to be with you today. And as you've mentioned, we've been focused on developing a battery graphite anode materials business. Over the last 9 years, we've spent $35 million developing this diversified anode manufacturing opportunity. We've got three core business opportunities. Starting on the left-hand side is our natural graphite project, which has undergone an enormous amount of development. It's undergoing a financing process at the moment with KfW, IPEX Bank. This has been a pretty long process, but the outlook is really quite positive for us with Tanzania. So we're looking to bring that into production, supported by a $60 million US financing. It'll produce natural flake graphite for the industrial market. On the other side, we've got our battery anode materials business, which is really structured around our proprietary purification process that we've developed over the last 5 years. It's a non-hydrofluoric acid process. It's a clean, green method for producing purified spherical graphite for the lithium-ion battery market. And as most people will be aware, China produces all of the world's battery spherical graphite, and we're looking to produce an alternate supply arrangement for the markets. Utilizing our purification process, more recently, we've developed our lithium-ion battery recycling, applying a purification process to the recovery of the carbon anode material, and that's quite an exciting opportunity for us. It's early stage, but some of the results that we'll go through today is very exciting for the company. Quick overview of the company. We're Perth-based here in West Australia. We're listed on the ASX. We've got quite a reasonable market cap, just over 300 million. We've got 52 million Australian dollars in the bank, so we've got sufficient financing, equity financing for our planned production. And we're also trading on the Frankfurt in the European market. We're at the moment just waiting for the DTC registration for our OTC QX listing. We think there'll be greater liquidity once that is registered, and we're expecting that over the next couple of weeks. We've been very strongly supported by First Sentier, our largest shareholder. They've been a very strong supporter, and we've had really strong support from other long funds, which includes Allianz Global Partners and Paradise Investment. We've been expanding our team here in Perth in expectation of developing our first downstream manufacturing facility here in Perth, Western Australia, with the appointment of Sean O'Neill and Michael Chan. The value proposition for the company is significant, and I guess the key important message here is the planned production is quite a modest, realistic set to today's demand. 20,000 tonnes of battery graphite, battery spherical graphite, is targeting about 8 to 10% of the market outside of China, and we believe that we'll be able to scale this production up. The capex is quite modest, and the equity returns is shown there, quite attractive. Our Tanzanian operation, again, 60,000 tonnes of planned production, is about 10% of the global graphite market, or just a touch under, and the returns are shown there. But we believe both these developments will be scaled as demand increases due to this significant move towards e-mobility and energy storage. And our recycling business on the right-hand side, we see as a bolt-on, once we get to a commercial opportunity, to bolt the solution on to recover the carbon anode material and support the EV manufacturers, battery manufacturers, and the recyclers globally in those markets. The next slide presents an overview of our position. Our focus is very much to bring our first downstream development here in West Australia, starting off with 20,000 tonnes in East Africa. We'll be bringing our 60,000 tonnes of natural flake graphite into production. And as demand increases outside of Asia, in about 4 to 5 years, we see significant growth in this European market, and we're working towards developing a second plant in. And that's quite advanced. We also like India and obviously the US and Asia as other locations to co-locate our production facilities to support the demand. However, our focus has been on Kwinana, and this is where we're planning to commence with 20,000 tonnes. We've secured a 6.7 hectare site, as shown here. We're attracted to obviously Kwinana, the Rockingham zone, really centred around it will be the global recognised battery minerals hub for cathode minerals, given the huge endowment here in West Australia. But also we see, the opportunity to go further downstream and value our product here in West Australia into coatings and cell manufacturing. This development is quite advanced. We've completed quite a significant amount of due diligence. We've secured conditional support through the federal government, through Export Finance Australia, for a $35 million loan to expand the initial 5,000 tonnes to 20,000 tonnes. We're working with GR Engineering to complete the pre-construction and the detailed engineering, and we're expecting to finalise the EPC shortly. And we're working on quite significant in the background on product development, and we've developed this zero waste strategy, which is quite an exciting opportunity for our company, which I'll touch on shortly. We're working through the final permitting and approvals, and where we believe we'll be bringing all this together over the next few months, and that's quite an exciting opportunity in terms of construction and then into production, which is 11-month. It's an 11-month construction period. The next slide just touches on the zero waste operating strategy that we've adopted, and we've developed 3 key products: a super BAM, which is a enhanced high density performance material, really a finer material that is maximizing the opportunity to value add the byproduct to produce purified spherical graphite. We have about a 50% yield, and we're looking to value add that fine material. So we're looking to value add rather than sell at a lower value market. So the super BAM is a really significant opportunity, and also more equally with that is the green recarb, which is really interesting development for us, because as the world moves to lower carbon emissions, so does big industry, and one of the biggest polluters is the steel manufacturing, and 4% carbon is required in steel manufacturing, and we're developing this clean green carb additive as an alternate, particularly for the green steel and move to hydrogen steel manufacturing. So that's at early stage, but the results and early work we've done so far is quite exciting. And the EcoChem is a cathode enhanced material used in alkaline batteries, which is quite a significant market as well. The growth in Europe is growing, and the enormous investment going on there will require, we expect, a shift out of Asia, raw material demand out of Asia in about 4 to 5 years. So we're quite serious about looking at a second location. We're working on several fronts. We've secured a site in Sweden, and we're working through that process. We're also working with Germany, looking at 5 sites. Potentially 5 sites there, and we're getting great support from the French government agencies introducing lithium-ion battery industry partners, and we see there's an opportunity in Western Europe to potentially co-locate facilities. This is a really exciting opportunity, but our approach is really to partner and collaborate with industry partners in the supply line. This is not about pitching up a tent and just trying to sell wares. This is about strategic partnership and collaboration in Europe. So that's the downstream. Our recycling business, as I've mentioned, is focused on recovering the carbon anode material. We see two clear opportunities: production scrap from the anode cell manufacturers, and also black mass after hydrometallurgical processes have recovered the cathode metals, which has been really the focus for battery recycling to date. At the moment, there is no carbon recycling, carbon anode recycling, and many of you will realise that the carbon in the anode is the most significant raw material. It's over half the battery. So the battery contains a lot of carbon, and the importance of recovering the carbon is now being identified by EU legislation. There is now policy legislation coming into place that will require greater recycling, and we're one of the front runners looking at this, and the results we're achieving is quite significant. We see two clear opportunities around if we can recover and reuse the material, is we reduce battery unit costs, which is really important in the supply chain, and also lowering carbon emissions. There's a lot of production waste during the generation of production of lithium-ion batteries. Up to 10 to 30% is waste. So there's a lot of material to recycle and reuse. The results we've generated is really significant, and we've got quite a clear strategy on how we're going to approach it and what markets we're going to evaluate for reuse. But obviously the focus is picking up the carbon production waste and putting that straight back into the battery, and collaborating with partners. We've signed our first agreement with Sungil High-Tech, which is South Korea's largest lithium-ion battery recyclers, and they're very well positioned in South Korea, and that's really an exciting opportunity for us. But we're working with a number of other parties on this to provide potential solutions. We've got to a point where last month we completed based on the significant results we're achieving, we've completed an engineering through GR Engineering, a capex of 5.8 to build a modular containerized pilot plant. And the reason for going down this route is really we're at a point where we need to provide sufficient quantities rather than lab scale, increase the production for production's qualification for end customers. So we designed a plant that will produce, will have a throughput of between 50 to 100 kilos. This will be a state-of-the-art piloting facility. We're expecting it and hoping it to be located in West Australia within our facility here, but we're also open to working with potential customers, and we're in discussion, as I mentioned, with a number of parties. And depending on how that discusses, it'll depend where the plant will be located. But we've designed the plant to be modular, containerized, and provide a clear solution for customers in the market. The next slide is an overview of our growth strategy, which is really tiered to the enormous demand in anode manufacturing and raw materials. So on the left-hand side is our battery anode materials, and we see significant growth around expanding our Australian operation, then expanding into Europe, Asia, US, and India as this market expands past the small requirements at the moment. Matched with that will be our natural graphite project that's initially planning 60,000 tonnes. There's enormous endowment of graphite at our Panko project, and we can double, triple production as demand grows. And there's no point producing more than the market requires. This is a market that needs to be matched with exact demand, and that's how we've approached both the downstream and the natural flake graphite project. We've got our product development, value enhancement products, and we're also thinking about innovation. You must think about innovation in this business, and we've just recently signed an agreement with FYI Resources, who are potentially in joint venture discussions with Alcoa around high purity alumina coatings, which is really exciting for West Australia to look at, two homegrown products to contribute to innovation. And we've got our recycling business, which we see as a bolt-on solution to lithium-ion battery recyclers, hydrometallurgical recyclers, and that will be a significant opportunity for the company as going forward. And just to finalise, how all that fits together in our vertically integrated supply, we have our Tanzanian graphite project, which is being financed at an international IFC World Bank standard. We've also qualified a number of existing global producers as feedstocks that comes into our battery anode materials facility to produce two key products, our purified spherical graphite and SuperBAM into the lithium-ion battery manufacturers, initially into Northeast Asia, but then as cell manufacturing migrates out of Asia into Europe, into those markets as well. And there's our recycling business, picking up the production scrap and looking into supporting the circular economy. And the other real opportunity that I haven't mentioned is, potentially blending our purified SPG to enhance the recovered material to give greater opportunity to recycle this material into the lithium-ion battery market. So we see the future as electric. For anybody, that we've got an enormous amount of information on our website regarding these three key businesses, and please feel free to visit our website, join our newsletter, and I look forward to any questions. And back to you, Laura.
Thank you very much, Andrew, for that presentation. A question around your strategy moving into Europe. Could you please elaborate a little bit more on that, and why this is a key market for EcoGraf?
We very much see at the moment all the demand for raw materials, particularly graphite, is in Northeast Asia. The growth is going to come out of Asia into Europe in about 4 to 5 years, and we see these battery hubs developing, localizing and regionalizing the supply chain. The value opportunity of taking spherical graphite and going further downstream is quite significant. There's a lot of value in the downstream value adding, and we see that the Europeans are really putting a lot of money in to source that value adding, and they'll be partnering with Asian customers, but it'll be co-located in Europe. And we see, we look at Europe in three dimensions: Northern Europe, Western Europe with Germany, Poland, Hungary, and then Western Europe with France, Spain, and the UK. So we see quite a significant opportunity that these chains will want to see localized supply chains. And there's also protection of IP. Innovation is key to the success here, and all these battery manufacturers want to keep their IP quite close. So moving their materials globally around is something they're trying to maneuver against, and that's why we're developing this strategy, because I think it'll be largely localized.
And have you taken a view as to which of those European dimensions will kind of move first into this space? So you mentioned that there's 3 of them. Curious to hear your thoughts.
Yes, no, very much so. We've been drawn to Sweden. There's power, renewable power, cheap power, but also there's significant battery development in Sweden. We also have been working with German Trade and Invest. There's also is the heart of the whole EV market with all the major German manufacturers. So we see German and France, and let's not forget the US. There's significant opportunity in the US as well that want to localize. Mining only obtains, for the natural graphite market, mining of concentrate only attracts about 5% of the value chain. There's a lot more value to be achieved going further downstream.
Interesting. Well, thank you so much for your presentation today, Andrew. We'll keep following along your journey.
Thanks very much. Nice to be with you.